in what's typically the busy season for IPOs, but this year it's unusually quiet, especially after some of the big debuts we saw earlier this fall. Bob Pisani is here to talk about what's tamping down activity. Bob?
Well, this is it, Kelly. The weeks before Thanksgiving usually bring a spate of large IPOs eager to go public before the holiday season starts. Except nothing is happening. There are no major IPOs on the docket for this month. And major IPO candidates, perennial candidates, Waystar, Panera Bread, Klarna, and even more perennial candidates like Reddit or Stripe, they seem like they're putting off their IPOs into 2024, if at all. So what's going on here? Well, first, we have this terrible performance for stocks in October that threw a wet blanket over a lot of things. We have higher for longer interest rates. We have the very poor aftermarket performance from the recent spate of IPOs this summer and the prospects of dramatically lower valuations. You put it all together, and that's causing a lot of IPO candidates to rethink or delay their IPOs. Now, you contrast this desert we're seeing this month with November, December of 2021. Look what happened. We had Rivian, the biggest IPO of the year, this day. 2 years ago, we had Hertz, Braze, Sweetgreen, and Allbirds. December 2020, right around there, we had Airbnb along with DoorDash, Sotera Health, Miravi Life Sciences. You see, there's nothing here after all these big deals. And there wasn't anything last year either. But there's no big IPOs this month either. So there is a small window in December. Something could happen if market conditions improve. But if not, the 800 or so tech unicorns are having very unpalatable options. So number one, here's first option. You go public, likely with a substantial haircut. Option two, you stay private, also likely with a haircut, and you hope that your venture capital source will continue to fund you. Or three, you merge or go out of business. There's a fourth problem here, and that is AI is what's exciting, but the AI companies are still too small to go public. And a lot of these other companies are sitting out there that are old, not in AI, so you have competition now. That's the hot thing. And that's, by the way, Kelly, the reason ARM has held up so well is because that's part of that AI excitement. Most everything else is not.
All right, Bob, stay with us. Let's take a look at some of how the companies that have gone public recently have performed so far this quarter. Klaviyo down 23%, Instacart down 17%, Burke down 13%, ARM hanging in there like Bob mentioned, but still down about 4%. And the broader market is up too during that time. Let's turn to Aswath Damodaran. He's professor at NYU Stern School of Business. You've done a lot of valuation work on these companies individually, Aswath. And so overall, do these prices reflect fair value in a more rational IPO market, or are there market headwinds that are too formidable?
I think in a sense you can detect how healthy the IPO market is by the names of the companies going public. And if you look at the companies that have gone public, Instacart, everybody knows the name, Birkenstock, long-standing brand name, even ARM, the AI buzz. You're not seeing no-name companies losing money going public because in this market, they're going to get a reception that's not a good one. And I think what you've seen in the aftermarket is scaring people off, which is none of these companies have surged in the aftermarket. In healthy IPO markets, you go public often at a price too high and the price gets even higher. You're not seeing that happen in this market. And I think it's interesting to ask the question, why is that happening? Why is the IPO market so especially when the overall market doesn't seem to be doing badly? What is it about this year's bull market or rise in the market that you cannot, that's not leading to the IPOs that you usually see?
Yeah, and what do you think that answer is?
And I think the answer is that risk capital started leaving this market in the middle of 2022. By risk capital, I include capital in IPOs, capital in VCs, invest in startups. It's not come back, even though the market is up, partly because this has been such an unbalanced market. This is not a market where you're seeing a rise coming from the bottom. It's those 10, 15, 20 big companies carrying it. This is a market where I think the bullishness is coming from fear, not greed, and IPOs need greed a lot more than fear.